Bitcoin's potential future value. Predictions of a $100,000 asset. The discussion opens with a bold prediction regarding Bitcoin's future valuation, suggesting that it may soon reach $100,000. The speaker references insights from Matthew Seagull, the head of digital research at VanEck, who underscores the significance of Bitcoin's current market trajectory. With $107.7 billion in assets under management, the belief is that institutional investors are beginning to take Bitcoin seriously. Seagull's comments indicate a bullish sentiment, suggesting that the conditions are ripe for Bitcoin to rally, especially as the political landscape shifts with upcoming elections. Historical price patterns and volatility. Drawing parallels to previous election cycles, the speaker highlights a similar pattern observed in 2020, where Bitcoin experienced low volatility leading up to the election. This period of stagnation was followed by a substantial rally once the election results were announced, as new buyers entered the market, driven by increased optimism. The comparison to a video game industry paradigm illustrates that as older skeptics fade away, new generations of investors embrace Bitcoin, fueling demand. The anticipation surrounding the election is expected to act as a catalyst for renewed interest and investment in Bitcoin. The role of global economic factors. The influence of US sovereign debt. As the conversation shifts, the speaker discusses the broader economic context, particularly focusing on US sovereign debt. The expectation is that following the election, ratings agencies like Moody's may downgrade US debt, which could create a sense of urgency for investors to seek alternatives, such as Bitcoin. The rationale is that Bitcoin, with its capped supply of 21 million coins, offers a hedge against currency debasement and inflationary pressures. BRICS and emerging markets. The discussion also introduces the BRICS nations, Brazil, Russia, India, China, and South Africa, and their recent conference in Russia, where 6 new member countries joined. Notably, 3 of these new members, Argentina, the UAE, and Ethiopia, are now mining Bitcoin using government resources. This trend reflects a growing global recognition of Bitcoin as a viable asset outside traditional US influence. The speaker argues that there is significant momentum building outside the US to adopt Bitcoin as a means of circumventing what is perceived as irresponsible fiscal policy. Correlation dynamics of Bitcoin. Changing correlations with traditional assets. The conversation addresses Bitcoin's fluid relationship with traditional financial assets, noting that its correlations can change over time. Initially, the speaker mentions how Bitcoin had been perceived as a hedge against gold and the US dollar, but these correlations have fluctuated recently. It is suggested that Bitcoin's status as a chameleon makes it difficult to predict its short-term movements, but in the long term, it maintains a negative correlation with the US dollar and a positive correlation with money supply growth. Recent market behavior. In recent months, Bitcoin has demonstrated a more substantial correlation with risk assets such as the Nasdaq. This development has raised concerns among investors who might be hesitant to allocate funds to Bitcoin while its price movements seem tied to broader market trends. The speaker notes that despite this correlation, over a 10-year horizon, the correlation remains relatively low. This dynamic illustrates the complexity of Bitcoin's role in the financial landscape, challenging the notion of it as a safe haven asset. Institutional investment and Wall Street dynamics. BlackRock's strategic accumulation. The script highlights the recent activity of institutional investors, particularly BlackRock, which has reportedly accumulated over $1 billion in Bitcoin within a short span. This aggressive purchasing strategy indicates a long-term belief in Bitcoin's value, with the expectation that it could see a significant increase, potentially reaching a 20-fold gain from current levels. The speaker emphasizes that BlackRock, along with other major financial institutions like State Street and Vanguard, is positioning itself for substantial gains, suggesting that they do not enter markets without anticipating a significant return. The rise of a banking dynasty. The speaker argues that the coordinated efforts among these major financial institutions signal a formative stage in the establishment of a banking dynasty with substantial investments in Bitcoin. They suggest that these entities recognize the long-term potential of Bitcoin and are making strategic moves to secure their positions. This consolidation of power among major banks could significantly influence Bitcoin's market dynamics, reinforcing the idea that they are in it for the long haul. Long-term predictions and market cap. High valuation forecasts. In projecting Bitcoin's future value, some models suggest that Bitcoin could become a reserve asset, potentially reaching a staggering $3 million per coin by the year 2050. This prediction, while ambitious, is framed within the context of a compound annual growth rate of 16%, indicating that sustained growth is feasible. The conversation underscores that such a valuation isn't as extreme as it may initially sound, as the long-term trajectory is supported by ongoing adoption and integration into global financial systems. Bitcoin as a multi-trillion-dollar market. Imagine for a moment the potential for Bitcoin to mirror the multi-trillion-dollar market capitalizations seen in companies like Apple, Amazon, and Google. If Bitcoin were to experience a 20 times increase, it could align with a price of around $12 million per coin. This perspective aligns with views held by other prominent figures in the crypto space, reinforcing the notion that Bitcoin's ascendance is not merely speculative, but grounded in the changing economic landscape. The future landscape of Bitcoin. Institutional sentiment and regulatory outlook. The conversation concludes by discussing the potential future landscape for Bitcoin, particularly concerning regulatory frameworks. There is a prevailing sentiment that Bitcoin is not on a trajectory toward regulation into obscurity, as some may fear. The coordinated accumulation by major financial institutions suggests a belief in Bitcoin's resilience and long-term viability. As these institutions continue to invest and shape the market, Bitcoin is likely to experience significant price increases. Conclusion: a transformative asset class. Ultimately, the discussion paints a transformative picture of Bitcoin within the broader financial ecosystem. The combination of increasing institutional investment, shifting correlations with traditional assets, and the evolving global economic landscape positions Bitcoin as a compelling asset for both individual and institutional investors. As more entities recognize its potential, Bitcoin's future appears promising, with expectations of substantial growth and widespread adoption.